all the sectors as of now, when you look at it, are trading in the red, led by a decline coming in from the Nifty PSU Bank, metals as well as FMCG down more than all these three sectors down more than almost 1%. Otherwise, only infra is managing to hold with around 0.2% decline coming in over there. So keeping an eye out on these stocks. Metals have been a top drag today coming in a trade. Other than that, keep an eye out on how the Nifty does as of now is trading near the day's lowest point, Adiraj, and you can see just red coming in on the screens of the day's highest point. Even on the ticker you can see Cement Space Ultratech is also falling in trade.
Right, thank you Vinny for putting that into perspective. But it's Friday and time for Buy Now Sell Now Pathshala Bullet episode. The aim of this episode is to help our viewers understand the market jargons and help them make the best use out of all these technical charts available in the market. So let's get on board Kunal Bothra for the same. Kunal, we believe you would be speaking about the 200 DMA, that is the daily moving average. Take it away.
Thank you, Adiraj, for that. Thank you, Vinny. Good morning to all of you. Today's topic is not a major technical jargon, but it's a terminology which is used across the board by even the basic as well as even the pro technical analysts. And the indicator which I'm talking about is a daily moving average. But within the daily moving average, we'll be discussing specifically the 200-day moving average, the 200-day daily moving average on simple terms. Now, why is this, or how is the calculation is? The 200-day moving average is basically derived by taking the average of the last 200 days of closing. It generally maps up as a yearly closing for the stock because we expect around 200 odd trading sessions in a year. So, and the importance of this average is very, very critical because then it helps to identify stocks which are trading with a very strong kind of a trend bias for themselves, as well as it acts as a major inflection points of supports as well as resistances as well. So I've mapped up the 200-day moving average on the Nifty 50 charts. This is the blue line, as you can see, and the most important point is to highlight the zones where the asset class, index, stock, etc., they managed to take strong support for itself. So if you go back to the first chart where the Nifty 50 was trying to take support at the 200 moving average, look at these points over here. A sharp correction comes by, the correction halts closer to the 200 moving average. We see a strong bounce. Then comes a sharp correction. This was in 2002 start, and the correction halts closer to this 200 moving average trend line, and you see a bounce back again. The moment the index breaks below this average, that's where we say that a downward trend or a downward pressure starts for the index. Then there is a flip-flop action between this 200 moving average. Look at the extent of gaps which have created closer to this 200 moving average. Once the average gets broken down significantly or decisively, we see a sharper downtrend coming back into the indices. Same is the case on the upside. When the index breaks this particular key moving average, you see a stronger trend in play for the index, and that resistance now acts as a support for the index, which is why over the last 1 or 2 weeks I've been consistently highlighting that this 200 DMA should act as a major support for the index, and any corrections towards this average should be taken as an opportunity to go long. We look at the next slide as well for the Nifty 50, and again a very similar kind of a juncture where we look at this 200-day moving average initially acting as a resistance. Once that resistance is taken out, it changes its behavior and then starts to act as a support. So from here on, when the index was taking a resistance at this average, we see this index now taking a support at this 200-day moving average. These are classical trading points. The risk reward over here is extremely high because when you are going against the crowd and being contrarian, it always favors because the risk reward is always in your favor.
Absolutely, Kunal. Thank you so much for that. There is a higher risk, higher reward, but interesting thing to watch out for, 200-day moving average, which everyone keeps an eye out on, but these specific points are something that one should watch out for. But on that note, we'll slip into a short break, viewers. Don't go anywhere. We'll be taking your stock-related queries after the short break.
आग को फैलने से रोक।
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. And before we go across to your stock-related queries, let me bring on board Vikas Sethi, the fundamental expert for today. Vikas, before we start with queries, I want to ask you, given that the volatility we've seen in the markets, one day it's up, one day it's down, what should an investor be doing? How should an investor actually protect themselves from this volatility?
Good morning. No, as far as an investor is concerned, he should be investing in good quality, fundamentally sound stocks and sitting tight on it. I remain extremely bullish on India. Short-term gyrations would always be there. There would be volatility depending on how the international markets perform and the news flow which emanate from the Europe, the US, China. But we are really in a sweet spot. The only problem with us today is crude, which has again started going up, and the resultant fall in our currency. But except that, we are in a very sweet spot. Our corporate results are going to be good, and unlike the US and the Europe, we do not have so much of problems. So I feel an investor should look for quality stocks and look for opportunities in the markets to buy them. Meaning, whenever we see a fall, a correction, a decent correction, it's a good time, great time for long-term investors to be accumulating Indian stocks. The only thing which one should look at is that he should be buying quality and should not get carried away with penny stocks which start moving up when the market goes up.
That's the advice coming in from Vikas, avoid penny stocks, look at good long-term stocks coming in. But let's get started with all your stock-related queries. You can send us your queries either on Twitter, YouTube, or our WhatsApp number, which will be flashing on your screens. So you can send us your queries there. And let's get started with the queries. Obviously, on the technicals we have and charts, we have Kunal. He'll be answering short-term, while Vikas will be answering more long-term queries. And Kunal, I'm going to start with you with the first query we have coming in. And this one is coming in from Sudarshan, and this one is on Tata Chemicals. They've sold 1,340 call options of the October series. And could you give an advice on that? What should they be doing with this?
So I think, I'm not sure whether this is just a solitary strategy which you have done for Tata Chemicals. By that I mean, whether you've done this to hedge your positions on futures, or is it just a plain vanilla shorting of call options which you've done. But nevertheless, I think 1340 seems to be a very difficult kind of uptick for Tata Chemicals, at least so far, looking at the way the charts have shaped up. I think if I'm not wrong, the premium for this option would be just about some 5 rupees or 6 rupees odd. So for that, I would suggest that keep a stop loss, which could be, I think, closer to 1250 mark for Tata Chemicals, assuming if the stock in this leg of momentum breaks past about 1250 levels, that could be a time where you can look to exit this option.
Right. Coming back to you, Kunal, Raghav is writing to us from Lucknow, and he wants to know the future of the IT sector and earning guidance of IT companies for the next 5 years.
So I'm not sure on the IT earnings section, but then from the risk reward perspective, I think IT stocks at current levels would look very attractive to me, specifically because large cap IT names have corrected more than 25%. Mid cap IT stocks have gone through a correction of more than 40% from their previous respective highs from the previous year. So I think in that regards, they seem to be coming back to a very fair territory where the risk reward is very attractive. So if you have a longer term time horizon, I would suggest to start buying these stocks at current levels, or else if you want to wait out for maybe this month when the results would come out from any of these IT names, that could be a good point where you can probably filter much more in terms of the quality of stocks which you're looking to buy.
Okay. Vikas, this query is coming in for you. This query is from Dheeraj actually, and what he wants to know is on Borosil Renewables. Is it a good time to enter this stock for a long term now?
No, again, fundamentally a very good company. I've been bullish on the stock from lower levels. The stock has done really well, and they're actually enjoying monopoly as far as the manufacture of solar glass is concerned in India, and they're set to acquire a company in Germany, which is the largest company in Europe manufacturing solar glasses. And with the kind of problems which Europe is facing as far as energy is concerned, or the gas prices are exorbitant, I think this company is going to go places. So the recent correction is presenting a very good opportunity for long-term investors to acquire this stock. I remain bullish on this from a long-term point of view.
Coming back to you, Kunal, Kumar is writing to us from Tamil Nadu. Vanakkam to all our viewers. And he is asking what the best defense stock to put his money as part of his portfolio enhancement would be. He's looking at stock prices. He also said that all have run up significantly higher. Should he wait for some correction to invest, or can he invest now?
So I think you should wait out for a correction, but then the kind of stocks which I would suggest to buy would start off with the slight moderate beta names from the defense sector, and that would be the likes of HAL, BEL. I think these stocks are looking more formidable. These stocks have gone through a first round of a 10% plus correction for themselves. There could be another 8 to 10% correction from current levels into these stocks. But then if you have a buy and dips kind of a strategy, you can look out for both of these names. And then once the likes of Masgao Dock, GRSC, etc., once these stocks, they start to come back to their 50 DMAs and I think below that, so that could be a correction of more than 20% from current levels, then you can start chipping into these names as well. So as of now, I would suggest start off with the first two names, HAL and BEL. You can start at current levels, look to average another 10% lower, and then once the other stronger performing names like Masgao Dock, Cochin Shipyard, etc., once these stocks starts to correct 20%, that's the time where you can look to chip in.
Vikas, this next query we have is coming in from Vikas Negi, and he wants to know whether they can accumulate Berger Paints at current levels. What is the long-term view here?
Now, again, fundamentally a good company. The sector is doing well, and with the festive season underway, I think these paint companies would report very good numbers for this quarter, because in India normally before Diwali, a lot of houses get painted, and that is one segment which would continue to do well. And to add to that, auto demand is also robust, and that would also be positive for these paint companies. And the crude, which has fallen from $120 odd to the current levels of 90-95, although it's gone up over the last 2-3 days, but I think it's still much lower than what highs we had seen earlier. So I think the entire paint sector would continue to do well, and from the paint sector, Berger Paints is one of the good stocks to buy for long term. But my preferred bet would be an Asian Paint. If one should look for opportunities on any fall in Asian Paints to be acquiring that stock.
Vikas, Adhiraj here. Bala is writing from Coimbatore. He's bought 600 shares of GAIL at average price of 96. He's asking for a target price for a long term. Again,
GAIL is again a good company, Adhiraj, and this stock has also corrected quite sharply over the last few quarters. I think at the current levels, the valuations seem attractive. I think one can play for a 25 to 30% upside over the next 9 to 12 months in the stock.
Okay. Kunal, this next query is more of a broad-based query coming in. Manish Raju wants to know if you could suggest any mid-cap stock names that one could invest in for the next 3 to 6 months.
So I think there are a lot of strategies such which you can look out for from the mid-cap arena. See, something like LIC Housing Finance, for example, I think at 424.25 odd mark looks attractive to me on the charts. I think it's one of the improved trending stocks from the entire non-banking financial services space for itself. So that's one chart which you can look out for. The very recent breakouts which I've highlighted over the last couple of weeks was something like Inox Wind. That also looks very attractive to me on the charts, trading I think at closer to 148 and 149 levels for itself. NCC, a stock which I've recommended just off late, I think is also one of the other stock which I think is on the verge of a breakout on the chart. So there are many mid-cap names which are looking attractive. Giving preference to the chart patterns, I would rate it in these 3 orders which I've just highlighted.
Right, Vikas, this one's for you. Paras is writing to us from Pune. Good morning, and he's asking, should Varun Beverages be bought at current price?
Now, again, Varun Beverages is one stock which I like. The company has been doing well. It's a company which bottles Pepsi drinks in India, and plus they have exposure in or a presence in 6 other countries or 5 other countries, including India. It would be 6. And I think it's a good company. The stock has done well. And at the current levels, I think if one has a long-term point of view, then one should not be bothering about a 5 to 10% correction in line with the markets if at all that happens. But a long-term investor can start buying this stock at the current levels and can add on declines.
Kunal, this next query is on Arvind Limited. Mayank has bought Arvind Limited at 97 rupees per share. Could you provide a 4 to 6 month advice for this one? What should they be doing with this?
See, I think I would still believe that the stock has not broken out of a big trading range where you can expect a big return for Arvind Limited. At least on the weekly charts, many of the indicators are still into a negative territory for Arvind Limited. So that generally indicates that rallies, strong periods of spikes into the stock price may not be, stronger, periods which can sustain for a long time for these names. which in effect means that the stock would remain into a broad range for itself. So for example, 90 is a major support for Arvind, and on the other hand, I think closer to 105, 110 is a major resistance. So when you are into that kind of a trading range and when the indicators are negative, it's always prudent enough to try and exit the stock when they're nearing the resistances, because there is always a chance that the stocks can slip from those levels and come back to their support point. So you should try and trade between this band of 115 rupees for Arvind Limited, 90 as a support, 105, 110 should be a resistance where you can look to book profits.
Right. Srinivas Rao is writing from Hyderabad. He's bought Wipro shares at 510. He's asking whether we should suggest a hold or average at today's price. Kunal?
I would suggest a hold at current levels. If possible, you can look to average at current zones of 400 as well for Wipro. As I said earlier, that possibly many of these IT stocks, they could start showing signs of a pickup in terms of momentum. Now, the only catch towards these names is the results, which is likely to be due in the next couple of weeks for these IT stocks. So I think if that is not damaging enough to the stock price trends, then I believe that there could be a possibility these stocks may bottom out. So you can look to start buying at current levels, but a much more better confident trading opportunity would be assuming if there is no deep gashes into the stock post the results.
Because this next query we have is coming in from Satya, and this one is on Sona Comstar. They purchased Sona Comstar at 510 rupees per share. They want to know whether they can average at the current market price, and what's your advice coming in for this one for a 6 to 1 year time period? Should they continue to hold this?
Yeah, as far as Sona BLW is concerned, I remain bullish on this, although the stock has not been performing. The investors bought it at a price where he's witnessing around 10% losses, but I think it would be prudent to average at the current price. It's a fundamentally a good company and a proxy to the EV auto component sector. More than 50% of its current revenues come from the electric vehicle segment. This company has been one of the 3 companies which has been selected by Tesla for sourcing their auto component requirements. And with the way I see the growth in the electric vehicle segment, this company is going to do well, and they've pretty solid balance sheet, pretty solid margins, pretty solid return on equity. I think this stock would catch up sooner than later. So I think it'd be good to average at the current price.
Right. Coming to you, Vikas, Ayanta Chatterjee is writing to us from Kolkata. He's asking for a view on Infosys at current levels, and if not Infosys, then what should he add up in his portfolio for mid-term?
Again, Infosys I like. I feel the IT sector, which has been beaten down, is set for a rally. This quarter's results, which begin on 10th from TCS and then followed by HCL Tech and Wipro on the 12th, I think they should be good. They should not be. They should at least be positive surprise, because the markets have already factored in negative, results from these companies. Looking at the way the US has been doing, but I think rupees depreciation over the compared to the previous quarter, rupees weakness would add to their margins, and their problems as far as the attrition issues are concerned, the wage hikes are concerned, they're all now I think sorted out, and it should not be there in this quarter. And plus the tailwinds because of the depreciation in currency would add to their margins. I think we should be bracing up for a good quarter from the IT sector, and Infosys would lead that. So I remain bullish on Infosys.
Kunal, this next query we have is coming in on IDFC First Bank, and this one is from Dr. Gupesh from Kerala. Wants to know that is it a good time to actually enter IDFC First Bank and further accumulate, going forward as well for a 6-month holding period?
Well, I would suggest, so the identification is right that the stock looks attractive. It's given a breakout on multiple time frames, but the timing may not be, great. So, the only concern with IDFC First Bank on the charts is a formation of an RSI divergence. Now, in the month of September, the stock made a high, which I think was around 53.5 mark for IDFC First Bank. The RSI at that time was just around the 74 mark. Yesterday, when the stock made a high, which was about approximately 55, the RSI was just 67 for IDFC First Bank. So, which means that the values of RSI are dropping, the prices are increasing up higher. That's a sign of slowing down in terms of momentum, and that generally results into the stock price getting into a prolonged consolidation. So, I would suggest not to buy at the higher end of the price range. Wait out for a correction. Maybe if the correction starts off and the stock goes below the 50 mark, that would be a good starting point where you can look to buy.
Right, Kunal, this one's for you. Dashadri is writing to us. He's asking about, he's got 50 shares of Natco Pharma at 620. He's asking whether he can add more or exit right now.
I think we should look to average further at current levels, assuming if time is not an issue in terms of holding, because the stock seems to be forming some sort of a support at current levels. So I was tracking the stock from 600 levels, where many of these pharma stocks surprisingly had started to get into a breakout mode. Natco Pharma apparently as well has seen a good demand coming back into the stock. There was a marginal break just below that 600 levels, but the stock managed to come back quite quickly and briskly above that 600 mark for itself. That indicates that it's a strong support zone. I would suggest a hold.
Right, and on that note, stay with us. We slip into a short break, but don't go anywhere. When we come back, we get you the queries and the rapid fire round.
आग को फैलने से रोकना।
And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate.
Welcome back to Buy Now, Sell Now on ET Now. We continue with the query segment. Kunal, coming to you now. Kunal Thakkar is written to us and he wants to know about IDFC First Bank. He's holding 10% gains. He's asking within the next 2 years, will he book profits?
Yeah, I think you can continue to hold if it's a longer term time frame. But the only concern which I just highlighted some time back for IDFC First Bank is that there could be a possibility that the stock may correct on the very short term charts. So if you are okay with standing, even if you're sitting on a 10% gain, if you have a longer term time horizon, then I think good amount of profits could be gained for IDFC First Bank, because I believe that once the stock price settles post the correction, impending correction, then I think it could probably chart a course back again towards hitting the previous major highs and going beyond that as well. So time horizon is long term. I would suggest a hold.
Because this next query we have is coming in from Jay Krishnan from Kerala, and this one is on Maruti. They bought Maruti at 8,843 rupees per share. Their time period is mid to long-term holding period. So what should they be doing? Should they look to average? Currently, it's slightly below their level. So what should they be doing?
As far as Maruti is concerned, I remain bullish on this. The company has been doing well. Their monthly sales numbers have been good, and I've been positive on the auto sector as a whole. And within the space, Maruti stands out. Though he has bought it at a higher price and it's sitting on some losses, but I don't think he should be worried about that. He can also add at the current levels, and I think in the next, say 6 to 9 months, we could see a 5-figure on Maruti.
Kingdom, he's holding 500 shares of UPL at 789. Holding for short term, he's asking.
Well, 789, and I think from a short-term basis, you need to have at least some sort of a stop loss in place. The stock is now down 100 rupees from your entry point. So, and UPL is a kind of a stock which requires the markets to do exceptionally well, and in that phase, the stock starts to get into a mild bit of an uptrend for itself. So, I believe that we are into a phase where the markets are consolidating and going into a flip-flop kind of a trading range. In that time frame, generally UPL doesn't give you any major kind of an uptick. So if you're looking to hold on to it from a long-term play, then only it makes sense to sticking to UPL. Otherwise, from purely short-term play, I don't sense any major uptick which could come by to the stock in the near term.
Because this next query we have is coming in from New Delhi, and this one is from KJ Singh and Aarti Industries. For a long-term bet, they hold 25 stocks at 750 rupees. Should they continue to hold this?
No, again, fundamentally a great company. It's created huge wealth for its long-term investors over the last 5 years, and I think this company will continue to do so over the next 5 years. I remain bullish on the entire chemical sector, and within the sector, this is one of the best managed, best quality company. So I think the investor should continue to hold on to the stock.
Right. Vikas, this question has been addressed to you. Krish is writing to us from Chennai. He's holding 50 shares of Polyplex bought at 2,000 rupees. He's asking whether he can buy more at current price for the next 3 years.
Yeah, again, I think he should buy it at the current levels of close to 1,900. It's an excellent company, a leader in the polyester packaging industry, and this is one of the very few companies which gives dividends to its shareholders every quarter. And the growth has been really phenomenal over the last 2-3 years. And I do not see any reason why this company may not be growing at the same rate over the next 2-3 years. So I remain bullish on this, and I would advise the investor to buy into this stock at the current level.
Kunal, this next query we have is coming in from Snehashish Gupta, and they bought 100 shares of Century Textile at 890 rupees per share. What should they be doing? Should they continue to hold this?
I would suggest to hold on, possibly average, assuming if the stock corrects towards 800, that could bring your cost price just around that 840, 845 mark. That could be a good proposition given the kind of charts where the stock is consolidating. I think 845, 850 could be a pivot range. So use the dips towards 800 mark to average out.
Right. Kunal, coming to you. Nanda is writing to us from Kochi, holding Sonata Software, bought it 400 at 400 shares at 580 per share. He's asking whether he should hold or average out.
See, on the charts, the indicators have still not gotten to a breakout mode for Sonata Software. The stock has recovered from the previous lows, but then the correction also has been very sharp for Sonata Software. So I would suggest to wait out for maybe at least another couple of weeks, maybe if not then a couple of months as well. Let the stock give confirmation of a breakout above the 600 mark. Then the indicators would come back into positive, and then the chances of you making coming back to your cost price and making money would be far more achievable. So not to do anything at current levels, hold on to existing quantity, but above 600 is where you can do average or maybe look aggressively for hard targets.
Okay. The next query, Vikas, we have is coming in from Kolkata from Ayannathan Chatterjee, and what they want to know is that Infosys at current levels, what should they be doing? Should they look to add their portfolio if they have not got Infosys in their portfolio so far for a mid to long term view?
Yeah, there was a question on Infosys by some other viewer, and I addressed it in details that I remain bullish on the IT sector, and the positives which go for the sector are the depreciation in rupee, and plus the problems which the sector was grappling with, the problems of attrition, the wage hike. I think they are now sorted out, and I think we should be headed for good quarters from IT companies, and Infosys remains the leader of the pack. So I think one can safely buy Infosys at the current levels, although if one has a short-term point of view, then one should wait for this quarter's results. But for medium to long-term investors, I think this time is a good time to buy Infosys, and for any reason, if the stock comes down, I think one should be adding on every declines.
Vikas, coming to you again. Vincent is writing to us from Bangalore. He's asking whether he should switch from Clean Science to Coromandel, and he's a long-term investor.
Now again, Adhiraj, both the stocks are good companies. Both the companies are really good ones. Fundamentals look extremely good. Even Clean Science Technology is a niche company, and I remain bullish on that. And Coromandel International remains a favorite pick when you talk about the fertilizers and the chemical sector. So both the companies are good, and I think it's very difficult to actually tell you whether one should be switching from Clean Science to Coromandel. One can, if he has sufficient quantity of Clean Science, then he can sell half of it and even invest that in Coromandel International, but would not like to completely get out of Clean Science. I remain bullish on that.
Okay. Kunal, this next query we have is coming in from KR Balan, and this one is on Everest Industries. They want to know that if they want to invest in Everest Industries for a 6 month to 12 month period, is it a good time to enter this one?
Well, may not be a best time to enter the stock. I think after yesterday's rally of more than 10% plus, the stock seems to have become a bit more expensive. But then I think closer to 720, 725 mark, which could also be a sort of a midpoint of the rally in the last 1-2 days you've seen for Everest Industries. I think if you get the stock closer to that 725 mark, that would be a point where you can look to buy.
Right, Kunal, Madan Mohan is writing to us. He has 700 shares of Balrampur Chini at 425. He's asking for what are the prospects.
Well, I would suggest to hold on. I think in the sugar space is getting a bit more fragmented, but then Balrampur Chini is one of the better performing names on the charts, more from a long-term basis. I think you should look to buy or hold on at current levels.
Because next query we have is coming in from Rekha Jain from Karnataka, and wants to know should they be looking to buy Ultratech Cement for a long term at the current market price?
To the investor, I would like to say she's selected the best stock from among the cement sector to own from a long-term point of view. Although the stock has really done well, and the entire cement sector is going through a dream run post the acquisition of Ambuja and ACC Cement by Adani Group. I think Ultratech, being the largest player in the cement industry and with the backing of the Birla Group, professional and an aggressive management, I think this stock would continue to do well. Although it may be expensive at the current levels, but I think at the current levels, one should be using a staggered approach to be buying it from a long term.
Right, Vikas, this one's for you. Vivek is writing to us and he wants to invest in mid caps and he's asking you to suggest a basket in fundamentally good stocks.
There's a couple of stocks which instantly come to my mind. I think if one has a 6 to 9 months horizon, one should be keeping an eye on the forthcoming budget. And from that point of view, I think the domestic oriented sectors like an infrastructure sector where Kunal has recently recommended NCC, I too like that stock. And from the infrastructure sector, I think one other stock which one could look at is ITD Cementation, which looks good at the current levels of close to 112. Then fertilizers and chemicals, that sector also looks good. And from there, I've been bullish on RCF, which is GNFC looks good. Deepak Nitrite looks good. Then I think one could even look at some mid-cap IT stocks because I think IT stocks have not participated in the recent run-up, and some stocks because as I've been telling you, I feel the problems regarding attrition and wage hike should be a thing of the past, and rupee depreciation should be a good tailwind which they would enjoy. So I think New-Gen Software, Genser Technologies, Nucleus Software would be some of the stocks which I like at the current level.
Kunal, the next query we have is coming in on HDFC Bank. This is from Anand, who's writing from Gurgaon. They have 102 HDFC Bank shares at 1,436 rupees per share. Can they look to exit and move to IndusInd Bank for a 6 to 8 month time period horizon?
Well, yes, I think if that's the kind of a time horizon, then I would suggest to make that switch. And surprisingly, it's intriguing because HDFC Bank seems to have been an underperformer in the last I would not just say the last 2-3 months, but then over the last 8 to 9 months of this, yearly price movement as such. I think that's strange because, typically HDFC Bank is one of the torchbearers for the banking index. But, the Bank Nifty making a new high sometime back, HDFC Bank was nowhere closer to its, fresh highs for itself. So it's been an underperformer. I would suggest making that switch could be a prudent decision.
Okay. And let's get started with the rapid fire then. And Vikas, I'm going to start with you for the first query there. Hemanta Datta is asking, holding 50 shares of SBI at 466 and 41 shares of Praj at 381. Should they continue to hold this, add position or exit these two stocks?
No doubt about it. Both the stocks are good quality stocks and they should be holding on.
Kunal, this one's for you. Shailesh is writing to us from Tirupati. He owns 140 shares of Data Patterns at 818. He's asking what more should he buy at this point?
Well, I think you can look to hold the current stock at the stock at current levels.
Okay. Vikas, Subhash Agarwal is holding 1,500 shares of ONGC at an average price of 148 rupees. Should they continue to hold this for the next 12 to 15 months?
I think if his horizon is 12 to 15 months, he can get out of ONGC because in the short term it could do well because the crude prices have again started going up. But I am not bullish on the crude prices going up from here. So he can exit ONGC on every rise.
Kunal, Shashi Dua is writing to us from Gurgaon. She's asking what is the target for Larsen in 6 months?
2,000 plus could be a nominal target for Larsen. It's a low beta stock, so you can expect the stock to get into a 5 to 10% kind of an uptick over the near term.
Okay. We have Shobhana asking about alkyl amines. Vikas, should they look to buy at the current market price?
Yeah, again, a good company to invest from a long term. I think one can buy the current.
Right, Vikas, Shashikala is writing to us holding 32 shares of Nykaa at 2,225. She's asking what she should do. Can she hold for a long term?
She's sitting on huge losses, but from the current levels, the stock did well. So I would maintain off the current.
Kunal, next query we have is Aditya Prakash. They said that they're stuck in Cosmos Phil. They bought it at 987. What should they be doing?
Well, I think I would suggest to exit the stock. It's been a big underperformer. The correction has been very steep and sharp of late. I would suggest an exit.
Kunal, Vishal Sharma is writing to us from Delhi. He's asking whether he should enter defense stocks after this big rally. If yes, what stocks can be looked at?
As I mentioned earlier, HAL, BEL could be the preferred picks, but then you have to wait out for a stock, for these stocks to correct by another 10%. That will be a very good attract to buy.
Okay, with that, it's an end to today's query segment. Thank you so much, Kunal, as well as Vikas, for joining in with us this morning, as well as thank you so much, viewers, for tuning in for the query segment. But we'll slip into a short break, viewers. Don't go anywhere. We'll be back with more news after this break.
आग को फैलने से रोकना।
It, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress. of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's look at what the markets are doing as of now. They continue to be in the red, but top gainers, Titan, Hero MotoCorp, Maruti Suzuki are among the top names coming in there. Sensex still down 200 points, almost 200 points, while more than 200 points, while Nifty is around the 17,260 levels, keeping an eye out on the markets. But S. Nareen, the ED and CIO at ICICI Prudential AMC, sees a good scope in the logistics and the transportation sector and believes that the logistics is an interesting long-term theme coming in. Let's listen in to his views.
We felt that, logistics as a sector has to keep growing in a country like India because we can't afford to be very small and export and import. So we felt that, we always look for themes which have not done well over a long period of time. And we approached the regulator to give us permission to launch thematic funds like the Transportation and Logistics Fund. And we felt that such an opportunity for long-term investment, after all, India will have to have much more two-wheelers on the road, much more cars on the road, much more commercial vehicles on the road over a period of time. And India has a beautiful manufacturing base for auto ancillary. Again, logistics has to keep improving because, frankly, over a period of time, both India, everyone talks about China plus one and now Europe plus one. Both China plus one and Europe plus one means that logistics have to grow over the next decade or the next few decades. We have to bet on recession-free exporters. That's the reason why we have been positive on pharma as a sector, because that's a recession-free sector. People have to consume medicines, and that will be the last thing that they can economize on. So that's the reason why we are positive on pharma. So if you look at the power sector, our weightages have been much, much higher than the benchmark in almost all the funds in ICICI Prudential. So some amount of our position we would still be one of the largest investors in the power sector. If you look at IT, it's a sector where at some point of time, we have to look at increasing our holdings in some of the funds where we are underweight. As the US recession develops, I believe that we will have to look at increasing our holdings at that point of time. It is a sector with huge long-term potential, and it's a sector which also benefits out of a depreciating rupee. But in the near term, it's hurt by the global outlook for growth. But the long-term outlook looks very good. So it's a sector actually we should be betting into rather than cutting our holdings at this point of time. And I don't think it's a sector where of course, if it suddenly does well due to rupee moves, we could cut our holdings. But as such, we would be looking to invest in that sector. And that's the way we would be looking into the entire sector as such.
Right, and that was all from Vinny and I on this edition of Buy Now, Sell Now on ET Now. But don't go anywhere. Anisha and Pankaj takes the action forward in Markets at Noon.
आग को फैलने से रोकना मुश्किल है.
Question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees.
Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, It's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much.
Benchmark indices snap the two-day gains. Investor look at the global cues ahead of the key important jobs data. All sectors lag except consumer stocks driven by title.
The rupee hits another record low versus the dollar, breaching the 82 versus the dollar level for the first time. This as the dollar index remained firm ahead of the crucial